For 6.5 hours today, the market did almost nothing. The S&P 500 finished down 1.5 points. That is 0.02%. The equal weight version actually finished slightly higher. A flat, forgettable Wednesday. Then, 20 minutes after the closing bell, the largest company in that index reported the biggest quarter it has ever had. Here is what Nvidia actually said. Revenue for the quarter, $96.2 billion. That is up 18% from the previous quarter and up 106% from a year ago. Data center revenue alone was $89 billion, up 117%. Gross margin, 75%. Earnings per share, $2.46 against $1.08 a year ago. Every one of those numbers comes from the company's own release, not from a summary of it. Now the part that scrolls past. Nvidia guided next quarter to $108 billion, plus or minus 2%. But it also guided gross margin down from 75% to 74%. And the company states plainly that this outlook assumes no data center compute revenue from China at all. Those two lines are in the same release as the record. A record and a narrower margin can both be true. So why does a report that landed after hours matter to an index that already closed? Because of weighting. We spent the last 2 sessions on this. The S&P 500 weights companies by size, and Nvidia is the heaviest weight in it, at roughly $5 trillion. During the session, the stock fell 1.59%. After the report, it traded up about 3.95%. That gap does not show up in today's close. It shows up in tomorrow's. Here is what to actually watch, and it is not a forecast. First, whether that after-hours move survives the open, because after-hours prices are thin and they often do not. Second, the gap between cap weight and equal weight, which is now flipped 3 sessions in a row, minus 0.38, plus 0.37, and today, minus 0.17. Third, the margin line, not the revenue line, in the next report. The lesson from today is simple. The close is a snapshot, not the whole day. Sometimes the news arrives after the picture was taken.